You're watching Capital Market live on Channels Television. I'm Ladi Williams, and first things first, let's take a look at how your money performed earlier this week. Starting with stocks in the global market now, you see European stock markets closed lower on Friday after 5 positive sessions. The original stock 600 index closed 0.1% lower after moving between marginal gains and losses throughout the day. Tech stocks held on to recent gains, up by 1.2%, while telecom stocks fell by 1.3% after Nokia cut its sales and margin outlook, and Ericsson results underwhelmed. Oil and gas was also down about 2.1%, and we saw mining stocks lost about 1%. So that's how it played out in Europe. In Asia Pacific, markets rose on Friday after more inflation data out from the U.S. Came in softer than expected, raising optimism that inflation could come down without weakening the labor market. In mainland China, the Shanghai Composite added 0.04% to close at 3,237 points, while in Japan, the Nikkei 225 traded down about 0.09% to 32,391.22 points. And the Dow Jones Industrial Average climbed on Friday as strong earnings results from some of the biggest banks and companies kicked off earnings season. The 30-stock Dow added 113 points, about 0.33%, to close at 34,509 points at the market's fifth consecutive day of gains. Meanwhile, the S&P 500 dropped 0.10% to close at 4,505 points, while the Nasdaq Composite declined 0.18%, ending at 14,113 points. Both the S&P 500 and the Nasdaq touched their highest intraday levels since April 2022. And now for a review of U.S. equity market performance for the week, I have Rukoe Ojugo, equity market analyst. She joins me via Zoom. Great to have you on the show.
Great to be here, Ladi. How are you doing?
I'm doing great. So how do you see market performance this week with the positive June inflation data we got earlier in the week? That was Wednesday. Investors were quite happy with that.
Yeah. Yes. So just to tell you a bit about what's happened this week, like all three top stock market indices, talking about the Dow Jones, Nasdaq, and S&P, had their best weekly performance gains since March. So they were up about 2%, each Nasdaq up 3.3%, marking the largest weekly gain since March for Dow Jones and Nasdaq and since mid-June for S&P. And a lot of this was largely driven by tech stocks. And they call them this acronym MAMA. The M stands for Meta, aka Facebook. And the other M is Microsoft. Then the A's are Alphabet, aka Google, Apple, and Amazon. Then we also include two other stocks called NVIDIA, which is a semiconductor, as we know, the electric car company. Now, these companies have been doing so well this year because, unlike expectations, these tech stocks have been delivering solid returns. And then we're all talking about AI, and these companies are in the forefront of AI. NVIDIA, for example, they make these CPUs, aka chips that are just used in all the technology that the AI companies will need. And they're like the people with the monopoly on making those chips. So we expect that company will benefit from this AI wave that we're all talking about. People like Apple, people like Alphabet are in the forefront, Microsoft as well in the forefront of AI, just talking about ChatGPT, talking about Bard from Google, and Apple, of course, is the one with the hardware that everyone wants to use. And they all have this like privacy thing that Apple has going for them. So these stocks have been doing so well this year. They've been pulling up the S&P, pulling up the Nasdaq, ensuring that they're growing significantly. And other stocks are starting to pick up as well. So we've seen really strong performance this week, really strong performance year to date.
Quite an impressive performance there. But right now, we know Hollywood actors and writers in the U.S. are on strike, overpaid. It's the first time the two unions are striking simultaneously since 1960. How do you see this impacting, streaming giant stocks we have right there in the U.S.?
Yes. The first thing I'll say is we need to look at short-term and long-term impact. Short-term, I don't really see this causing significant impact for streaming giants, simply because streaming platforms, they don't really rely on new releases to grow. I mean, the consumers really enjoy new content coming on these platforms, but these streaming giants, they don't really get an instance where a lot of people flock to these platforms simply because they have new titles. So short term, their profits might not significantly be affected, but longer term, it can be affected in one of two ways, right? So what will happen is either the streaming giants cave to their demands and they start paying actors significantly more money, they start paying writers as well. And then this would mean that they would make less profit if they keep charging the same prices they're charging today. So that's one possible effect. But of course, we know companies like these, they are not just going to sit down and take less profits because investors are simply not going to be happy. So what's going to happen is that they're probably going to raise the price on the consumer. So it's going to end up in streaming companies or streaming platforms charging more money and then it's becoming more expensive for the consumer. So at the end of the day, I think in the short term, we don't see the significant impact immediately. Long term, if they cave to the demands, it means that the consumers are more likely to get higher prices going forward. And it's also important to point out that these streaming giants as separate entities are not very profitable on their own. So everyone likes to talk about Disney and Netflix. Netflix, for example, is profitable currently, but it took quite some time before they got to profitability. Disney Plus as a separate entity is not really profitable as a member of the Disney group. And then talking about other smaller streaming giants, those are also not profitable. So it's going to really push out the time that it would take for these streaming platforms to get to profitability, which will also make them unattractive to investors.
Right, quite interesting. Definitely a developing story, right? That we'll keep tracking and see how it plays out in the market next week. Always great having your perspective, Rukawe Ojugo, equity market analyst. Thank you so much for coming on.
Thank you for having me.
All right, now let's take a look at some news now that made headlines this week in the capital market. We see Nigerian Exchange Group PLC had its 62nd annual general meeting earlier this week. Top on the agenda was the annual report for the period ending December 31st, 2022. At the 62nd annual general meeting in Lagos, the chairman of the Nigerian Exchange Group PLC, Dr. Umaru Kwairangus, said the NGX Group is committed to navigating the economic landscape with resilience and innovation. Also, Mr. Oscar Onyema, Group Managing Director and Chief Executive Officer, lauded the NGX for achieving 10.3% increase in gross earnings despite the challenging economic environment. The financial report for 2022 shows total assets grew by 50%. Take a listen.
After demutualization, we know that this is a profit-oriented organization. What we are doing is to set up some very good platforms. We are looking even beyond Nigeria. We have already demonstrated this at exchange that have the capacity, have the potential to do much more than what we are doing today. You can see where we are making a lot of investment. You can see the lot of expenses that we are looking at so that we can be able to reduce them. Most of the issue raised at today's AGM is about issue of dividend. And we believe it's just a matter of time. We have given our words to the shareholders that we will look inward and make sure that we have increased the pie.
With regards to market performance, the market has done very well since demutualization. If you look at 2022, the market went up significantly with regards to equities market capitalization, fixed income market capitalization, took a little beating with regards to exchange traded funds. This year, already everybody knows that the market on the equity side has already gained over 5 trillion naira. On the fixed income side, the same thing. And on the ETF side, the same thing as well. So generally, since we demutualized, from a market perspective, the market has done well. If you look at the company itself, from a share price perspective, the company has done well as well. We listed at a little over 16 naira. The company, as of yesterday, closed at about 25 naira. In the last week, it was even higher. So generally, value has been created for shareholders. But I think the point shareholders are making to us is that in addition to capital appreciation, they would like to see us pay dividends. And that is top of mind for us.
And some other news now. The Central Bank of Nigeria has issued new corporate governance guidelines that restrict the acquisition of controlling stakes in financial holding firms to 5%. The guidelines released on July 14, 2023 require investors to obtain approval from the Central Bank of Nigeria before acquiring majority stakes in holding companies. The guidelines apply to commercial banks, merchant banks, non-interest banks, payment service banks, and financial holding companies. According to the CBN, the aim of the guidelines is to enhance corporate governance in Nigeria's financial sector. And Axis Bank PLC and Standard Chartered Bank reached agreements for the acquisition of Standard Chartered's subsidiaries in Angola, Cameroon, Gambia, and Sierra Leone, as well as its consumer private and business banking business in Tanzania. The completion of each transaction is subject to approval from local regulators and the banking regulator in Nigeria. The announcement was made at Standard Chartered's headquarters in London, with representatives from both banks present. Now let's review top stories in the week that's sure to shape investor sentiment and review of trading on the NGX. Joining me now is Damilare Ojo, Head Investment Research, Meristem Securities Limited. Great to have you in the show. Good evening.
Good evening, Ladi. Thank you very much for having me.
All right, let's start off with the Central Bank of Nigeria's new corporate governance guidelines stating any investor looking to acquire up to 5% of any bank in Nigeria will need to obtain prior approval and no objection from the central bank. Give us a sense of how investors are reacting to this and how it will impact investment in banks going forward.
Yeah, this is a very interesting time in the Nigerian market. I mean, looking at it from the banking sector perspective now, what the CBN is doing is to try to enhance corporate governance activities in different banks. You know, in prior years, we've had different dramas in different banks in Nigeria, and there are particular target banks that typically, experience this kind of issues around acquisition of shares and whatnot. And even recently, just last week, we had, or 2 weeks ago now, we had another announcement of another prominent Nigerian, coming back on another bank, acquiring a lot of equity stake. And this just, puts a bit of, from an equity perspective, you see that move is a bit of issue or worry for a lot of investors when a single individual is having about 14% equity stake in a bank, right? So what the central bank is doing is just, like I said earlier, to enhance corporate governance activities in different banks. And I think that this is positive for everyone in the market. This is positive for all investors. Everybody can have a share of the pie as the market is becoming more interesting, given the macro fundamentals that we also have in the country. So I think that investors are going to react positively to that because we are talking about corporate governance, and that's a very key consideration when choosing investment destinations, both from local investors and foreign portfolio investors that we are trying to attract into the country.
Quite interesting. And another big one this week is Axis Bank PLC and Standard Chartered Bank reaching agreements for the acquisition of Standard Chartered subsidiaries in most of sub-Saharan Africa. How do you see this impacting Axis Bank's business right here in Nigeria? Do you think this move will whet investor appetite towards Axis Bank's stocks?
I mean, the direct answer to that is yes, and this is, my view. Right from the beginning of this year, even before now, Access Bank has been very vocal about one thing, which is their growth strategy. On the 18th of January this year, Access Bank gathered a lot of equity, research analysts, the stockbrokers, and the general public, their investors as well, and they rolled out their 5-year, strategic plan, because their former 5-year strategic plan ended in 2022, and this year they've set out what they want to do for the next 5 years. And one critical thing that they are out there to do, I mean, one of the things they mentioned they want to do is to increase their strategic placement in different African countries. There are different things happening in Africa right now, not just in Nigeria, that that every bank is trying to position for. One of them is the African Free Trade Continental Agreement, which is going to increase trade activities among African countries. And Access Bank is trying to position itself in different African countries that they think that there is still a lot of growth in. And again, one of the things that we know is that the Nigerian banking sector is quite, is reaching its maturity stage. There's little room for growth just by staying in the Nigerian market. And Access Bank is one of those banks that have recognized the need to, to scale up their presence across other African countries, and to ensure that wherever they are present in, there are growth opportunities in those countries. And this is one thing that Access Bank is doing. And if you look at it generally, not just about Access Bank now, the equities market in Nigeria has been, it's been there've been a lot of activities right from the change of government in May 29 of this year. And this particular move by Access Bank is going to increase or entice investors more. Access Bank's share price has, gained appreciably this year so far. And, one of the things that we, from an equity point of view now, we think that the share price of Access Bank, has reached another, a new support level, has found a new support level, and you won't see, low prices that we've seen before for Access Bank in previous years. So I think that investors are going to get excited by this particular move of Access Bank, because it's going to increase their asset base, their customer base, and strategically speaking, it's, them positioning for the growth opportunities that is available in other African countries. So I think investors are going to be excited by this particular development.
Out for reactions next week. We'll take a quick break now. We'll still have with me Damilare Ojo, Head of Investment Research, Meristem Securities. When we come back, we'll get an outlook for the second half of 2023. What's going to happen with GDP and inflation? That's next. Do stay with us. This Capital Market live on Channels Television. Welcome back to watching Capital Market live on Channels Television. Well, I've still been speaking with Damilare Ojo, Head of Investment Research, Meristem Securities. Thank you for staying on.
Thank you for having me. Yeah.
All right, let's get an outlook for the second half of 2023. Definitely the first half has been quite bumpy. What's your research telling you about GDP growth in the second half of 2023? Do you expect some kind of soft landing, for the economy? And what are you seeing for inflation?
For GDP, yes. We expect that GDP is going to improve in the second half of the year. We have policies already in place that the new administration has brought to bear. And we think investors, foreign direct investors now, investment activities is going to increase in Nigeria, even from the manufacturers that we have. There are a lot of activities, a lot of policies that are targeted at improving the business environment in Nigeria. So we think that is going to enhance GDP in Nigeria. And for inflation, we've seen a lot of repricing of different goods or commodities in Nigeria, due to the removal of fuel subsidy, and that in itself is going to lead to higher inflation in Nigeria. We don't think that inflation is going to reduce, further in this year, regardless of whatever policies are being taken. These policy decisions are being taken. So we think inflation is going to increase to about 30% at the end of this year. That's average for this year. We think that inflation is going to be at about 30% because, like I said, we have repricing of different commodities, and we also still have security challenges in some of the agricultural producing states in Nigeria. We also know that the transport cost for different commodities is also impacted by the cost of fuel, which is now higher. So looking at all of these things, we think inflation is going to be higher in Nigeria by the end of this year.
How do you think, investors should position for, what's to come? Do you think the all-share index will be able to beat inflation, in 2023? Can investors beat inflation in 2023 right here in Nigeria?
Yes, I think that there is, on a stock-by-stock basis now, I think there is room for some stocks, beating inflation. But when you look at it from an all-share index perspective, that's the entire equities market. Our forecast is that we would have a return of about 27% by the end of the year. And that is slightly below the, inflation forecast of about 30% by December, by as an average for this year. But when we look at the equities market, this year, some stocks have already gained way higher than the current inflation rate and even way higher than the forecast average inflation of 30%. So there are particular stocks that we think there are a lot of upsides on them, and they will be able to beat the inflation rate. But looking at the aggregate market, which contains which is like a basket of all the listed equities tickers in Nigeria, that's what the returns that we are projecting is just slightly below the inflation rate.
And which sectors in the equities market do you see benefiting from, the macroeconomic reforms that we've been seeing in the first half and might see, in the second half of 2023?
I'm sorry, could you repeat that, please?
I'm saying, which sectors do you see in the equities market that will benefit from the macroeconomic, reforms we've seen in the first half and we might actually see in the second half of 2023?
Oh, great. So the sectors that we think would benefit most, one is the oil and gas sector. Another is the agri sector. We also have the trade sector and the manufacturing sector. And, when we look at different policies, I'll try to tie different policies to how they affect these sectors. When you look at the oil and gas sector, we've been recording almost throughout last year, we recorded, consistent decline in our oil production. But around, September, towards the end of the year, we saw increased activities by the government to increase or tighten security measures in those oil-producing regions in order to reduce incidences of oil theft and, pipeline vandalism. And that has actually been helping the country so far. I mean, we've reached a top of over 1.3 million barrels per day from a low of below 1 million barrels per day last year. So we think that the oil sector is going to benefit from that going forward. Another is the fact that, for the manufacturing sector, we just had a new regulation as well from the CBN yesterday that they are reducing the cash reserve requirement, the CRR of merchant banks, from 32.5% to about 10%. So that is going to lead to higher lending to wholesale manufacturers, and if that happens, then we'll see more activities, more investment activities. Although we know that the risk to that is still that we have the monetary policy rate being high, and that means that there is high cost of borrowing, but the access to the cash as well from, the lender's perspective, you then have a reduction in CRR means you have more cash with you as a merchant bank that you can lend to the real sector. So that is going to lead to more investment activities in the manufacturing sector. And when you look at the agri sector in Q1 recorded its first GDP, growth decline due to the ill implemented cash redesign policy that we had late last year into this year. And now that particular policy has been gradually rewinded, you would see that the agri sector going forward is going to also benefit from the fact that, we no longer have cash crunch. I mean, that also applies to the trade sector, which is largely the informal sector in Nigeria. With more cash now being out there than what we had in Q1, we believe that that sector is also going to benefit going forward from that policy, point of view. And lastly is that, okay, sorry.
Yeah, you can carry on.
Okay, so I was going to say, lastly, the fact that the FX market has also been effectively deregulated will have more certainty about how much you can get FX rate, because it's now market determined. You know that the CBN has already collapsed all FX markets into a single I&E window, and that certainty about how much we can, I'm likely to get FX is very important for manufacturers, very important for investors, foreign investors as well when they come. And the fact that you now have free flow of dollars, more or less, a lot of the restrictions around dollars have been lifted. So that would also enhance investment activities in different sectors in Nigeria.
Well, and definitely we're seeing the Naira react to that unification going up and down right now. But after touching the 65,000 level, the Ocean Index of the local bourse has ended the week about 62,569 points. Some say it's healthy profit taking. But in a few words, what are you seeing next week on the local bourse?
I mean, the profit-taking that we saw, I think is good for the market because it presents a new opportunity or low prices for new investors to come in. So I think investors are going to, you would see more transactions next week. You would see, equities markets likely to gain because a lot of tickers have already declined in this week that we are right. Ending. So I think that there will be increase in the markets next week.
Next week. All right, we're looking out for it. Thank you so much, Damilare Ojo, Head of Investment Research, Meristem Securities. Great having your perspective today. Enjoy the weekend.
Thank you for having me.
All right, so that's it on Capital Markets. Do join us same time next week. Don't forget you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, and you can watch all our production. You can also visit our website, www.channelstv.com for more. I'm Ladi Williams from me and the team at Channels HQ. It's bye for now.